Hey everyone, welcome to the market review. Well, the incredible is happening. We're broken out above the theoretical resistance here, the combo everything resistance with JP on color, yearly open, quarterly levels, blah blah blah, everything that we had as resistance before. And this is a clean break above. We're gonna close above it for sure. VIX is making new lows, VVIX is making new lows. Everything is lining up. Oil is making not new lows, but is going down quite big today. I'll get to that in a second. And we have to respect it. Apparently, we're getting a new bull market leg. And it is what it is. We move with it. I cut my SPY long somewhere around here and went bought some puts, which I cut today. I kept other longs and I'm like 50% invested, 60% invested, 50 between 50 and 60 all long now. And yeah. Okay, so looking at how things are right now, again, new bull phase. I'll talk about the bull phase, then we talk about the potential bear scenarios, and then we'll talk about oil and some other stuff as well. So first, the bull phase. So we are here, and this is the I this is the yearly ATR. We have a target here, which is going to be a long trigger. I think we go above to 7100 to hit this broadening formation. I'll do it like this. So first of all, we have the bigger structure is this very large broadening formation. 7100 is the top area for it. I think we will hit it relatively quickly. I think we just go straight up, continue doing what we've been doing here, like up, a bit of sideways up, maybe a pullback, but generally up, bit of sideways up again. And I think we continue doing this until we hit the 7110, 7100 level. Then I think we do a pullback. I turned off the ribbon, but oh no, sorry, not this one. Yeah, not this one either. No, I have the ribbon on, sorry. The daily ribbon, but let's switch to daily. So daily ribbon will be here. Um, we have flipped it green, obviously. It's going to become confluent with the yearly AV up. We tested the AV up once going down, and most likely we will, AV up will continue going up. Ribbon will continue going up until it becomes confluent with this area that was supposedly resistance. And I think after we get the 7100 at one point, we'll do a pullback for a couple of days. We're going to turn this area here into support and bounce of it when we test it again from coming from above. It's quite it's 10 points basically on SPY, like 690 to 680. So somewhere around this area. The more bullish we are, the higher is going the higher is going to be price wise. So if we are super bullish, it's going to be like 690. If we are less super bullish, it's going to be 680, something like that. But somewhere in this area, it will become support as the yearly AV up turns up. As the ribbon goes higher, it will become confluent. This is expected some time around end of month. The way the timing came in with this this breakout here, and the reversal we saw yesterday in software names and most beaten down names, is not just software, it's basically beaten down names. The most hated names have turned bullish. They are squeezing, like Microsoft, Oracle, Palantir, and so on. They're turning bullish, and this is likely to continue for a while longer. And what I was going to say about the OPEX timing is you would expect that when OPEX comes, we get a reversal the other way. I don't think this will happen this time because I think what we are seeing today or now is the reversal. It doesn't have to be exactly OPEX, and let's use Microsoft as the example and switch to daily. And we went to the lows. We're bouncing right now. We captured the AVR from the low here. Doesn't matter that much. The point I'm trying to make is that basically this move initiated in this week. This is the counter OPEX week. So it started early. What I expect happens moving forward is we get continuation. We go higher and higher. We squeeze more. I have Oracle here. So we squeeze more, we go higher, and so on and so on and so on. So the OPEX reversal is happening. It came early, and it's happening in names that have gone down, not in names that have gone up. So I expect names that have gone up maybe go sideways a bit, maybe some continue going higher and so on. But the OPEX reversal is actually what we're seeing in names like Oracle and Microsoft or Palantir or whatever. Many names like this or Hood. This is the OPEX reversal. It came a bit early and it's going to give continuation to the upside, not to the downside. This is what my base case is right now. And like I said, I think this continues until end of month from this cycle. And then end of month, we do the move down and we bounce, and then we can potentially do another leg higher that has a target based on the yearly levels of 6,300, 100. So we could potentially do, depending on how weak the market is, we could do a double top here in the broadening formation trend line. So we could potentially go here, then it becomes bearish, and we do like a double dip drop to retest 6,300. But again, this is a bullish setup. It won't be bearish. It's going to still. It would suggest that the lows will be at most retested. We won't go down all the way for new lows. So this is kind of how I see it. So this is the bearish option in which we kind of double top, but this would come most likely post May 15. So expectation is go up until around here, May 1st, then do a pullback probably like a week, and then we start another leg up, and maybe we top out around May OPEX. This will be the scenario in which we top out around May OPEX, and then go down into June completely and do the low retest here. But if we break out above this broadening formation, we have quite a lot of bullishness ahead of us. Initial target is 7,300, but most likely by year end we will hit 7,600 as well. So this will be leg one. This will be leg two of this move up, and probably another larger correction in the August, September, October window. That's the next window of weakness if we choose this path. Uh, if we choose this one, again, it's more sketchy. It will be like more consolidation in this broadening formation. You can imagine something like extending this for longer, like let's do it like this. So extending it, and we could potentially just be like a sideways market, go back to the highs, go back to the lows, and basically be in this broadening formation the entire year. So this is the double rejection here, and again we would be swinging around wildly for the remainder of the year. That's kind of the scenario in which that happens. Now, looking at the breadth indicators, let's talk about the bearish case a bit, or I wouldn't say it bearish because we're clearly bullish. I would say by things that are of concern in a negative way. So first of all, this is the UVOL DVOL. Uh, Through all of this correction, like since the February 25th when was the initiation of 26th until we got like the 10% drop. I think it was 9% for SPY. Let's measure it. 9 something percent from like the peak 963. Qs was like 12%, something like this. So in all this period, we only got 180 UVOL near the lows. It wasn't even on the lows or on the reversal. Like you would have expected it to be on this candle here when we reversed and did like almost 3% on this candle, but this wasn't the 80 UVOL, it was 70 something. And we didn't get a single 80 DVOL, so we didn't get capitulation. Aside from this, we're not getting any breadth thrust. Like previously, when we do the lows we got a breadth thrust around here. This one, we got a breadth thrust around here. And I looked back through all of the data and I couldn't find a single low which didn't have like multiple 80 UVOLs. I didn't find one which didn't have an 80 down vol day at all. So it's very strange, and kind of leaves us unresolved. So this wasn't a capitulation bottom. It wasn't a bottom that suggests that it was the final one. So quite a strange setup with this one, and this would favor the case in which we continue going sideways and we do another low retest or another move to the lows of the broadening formation. So this would be a kind of a suggestion that we haven't really resolved any issues we had going down, and now we're going up. We're getting squeezed on software and the most beaten down names, and further amplifying the squeeze up here. But it would suggest that we're gonna get a play out of this. Go to 7100, correct? Go to try to break out from 7100 from the broadening formation, get rejected, and go back down somewhere in the like May to June window. So this will be May to June. So because we haven't really had a breath thrust, we haven't really had like a capitulation move, we hadn't really have an impulsive move up that suggests that the buying pressure is real or sustainable. Although if you look at price, it's only green candles. This is fucking unreal, and it's pretty big candles. Today is like 64 UVOL, another theoretically low UVOL day, but we're getting 1% on SPY. Unfucking believable. More than 1%. So something is fishy and strange, but you have to respect it. So base case moving forward is probably going to be this one, basically 7100 pullback, bounce, double top. If we get like a what is called divergence here, bearish divergence on this top, a very significant one, which is I would kind of expect from now, is going to be a tell, and we go sideways. But we shall see. It's too early to tell. We still have a month of bullishness ahead of us, or theoretical bullishness. How big would this pullback be from like 7100? It would be like 3.5% ish, something like this. So yeah, this is the expectation. And like we haven't got, like I said, we haven't gotten a breath thrust. This is the Zwig one. We hit the threshold, but it's too slow. Wally breath thrust hasn't triggered either. We have the breakaway momentum, which Walter Deemer posted about it, and I said we need like 2,000 advances over decliners. No way. This is going to happen with only 60x UVOL. So we're not getting a breath thrust. We haven't had capitulation. Very iffy situation here, but a bullish one nonetheless. Now, I'm not going to talk about the breakout scenario too much because it seems quite unlikely to me. Maybe we get new data, maybe we get new developments on the war, maybe we get developments on oil. We'll see at that point, but I'm not going to go into it too much. I'll just show it here broadly. So this one would be go up in June, go up in July, top out around August, and do major pullback in August, September, October in that window. Further evidence that we still go higher is that VIX broke below 20. When VIX breaks below 20 and doesn't immediately recover, it's a sign that it's going lower. Uh, Basically, 20 is the bull bear flip. Like for example, we saw here, like it failed to go under 20. It bounced immediately from it and went higher again. Now we went to 20, found closed above it, but then faded below. We went up and faded again, and now we're making new lows. I think we go like to 16 before this thing tops out again. And even then, like we still have to begin the process of basically forming a new bottom in VIX, which would be something like this, maybe like this over the next month or so. So we still have time for this to play out. And Vivix, same kind of thing, like it went here, made new lows, didn't hold the support level, which is the bull bear flip. It's kind of showing that it's bouncing today, but not that relevant. And finally, oil. So this is quite fucking strange. I got a few some calls on close on Friday, which were green briefly when we opened this week, but went negative and I sold them today. Mm, I don't know. The strange thing here is the curve is all fucked up. Like for example, for this is WTI. And already in September, the curve is saying oil is going to be at 77. And then it goes lower and lower here, like it's saying it's going to be at 70 in January. And the curve is super fucking optimistic. Like the forward curve for the futures market is super fucking optimistic for oil, even with getting like 10% of the world's oil production offline. 20% for Hormuz overall, but only 10% is kind of offline. And we're probably going to lose like 1 billion barrels for the year in total. But looking at this, maybe we do get this pullback back to like the 77, 78 level, and then I would be happy to long oil again, and not oil necessarily, but oil stocks in this scenario. From what I see, why I cut today XOM is because we went below the trend line, we went below the 55 EMA, so I cut it out at open, and looking at it now, it looks like it's going to go to this area here um, before it finds support, like one slightly below 140. I think it will find support here, and it will be confluent with oil going to this like 79, 80, 80 area. So this is the area where I'm going to be longing oil again, and probably cutting the long stocks I am long here. Then we have Bitcoin. Flipped the ribbon, went above the 55 EMA, and this type is staying above, like it's consolidating above the 55 EMA. This also has like a broadening formation kind of thing here. We know that the short call whale in Hood, in Coin, in MicroStrategy is still in. So I would be surprised if this doesn't go lower at some point in the future. But for now, it could go like to 80k and get rejected here. It will respect this. We would be making sort of like a broadening formation for later on, which would suggest that the lows would be at around 55k. So something like this and go here, depending on when spending from here. So something like this, maybe 50k. We'll see. I wouldn't be surprised that if we if we get the bullish scenario, the one where we go above 7100, this probably has bottomed already and it will go higher. It will go all the way to the AVU up. If it breaks out above the broadening formation here, next target is the AVU up here. And I would assume after pullback, it will break above it and go back to 100k or something like this. So yeah, this is kind of the whole setup right now. Have to respect the bullishness. Oh, finally DXY. So DXY also has a broadening formation. Went to the top and didn't really go above, and it's not holding any of the support levels that it's supposed to be holding. And I think one of the reasons why we didn't get capitulation is because DXY hasn't broken out. They succeeded in various ways of suppressing oil, suppressing dollar, and they kind of got the whole thing under control. The market is somehow respecting it instead of punishing it, but it is what it is, like I said, and you have to respect it. So what could happen is we get a full DXY again. If we do the breakout, the full breakout, DXY should be going back to the lows here and eventually bouncing again and doing another cycle of high lows on this broadening formation. Uh, if we I think we finally get new lows and capitulation, sort of like capitulation move that would bring new lows if we get DXY breakout. I still think we got the oil move up, but apparently it wasn't enough to get DXY to break out. So I think the market is safe until we get a DXY breakout. The secret is still in the DXY build up and the DXY, the dollar wrecking ball. When the dollar becomes a wrecking ball because it's too high and it starts squeezing everything else, that's when the whole bull market breaks. But until then, they keep suppressing it. Somehow it's working, and it is what it is. I'm sure you guys heard the rumors about the treasury shorting oil to keep it suppressed. Again, just a rumor, but like it's incredible that Hormuz has been closed for 6 weeks now. Even if the war ends tomorrow, it's going to be in low productivity mode for another 2 to 3 months. So we get like 4 months of complete shutdown of Hormuz, and the market is still barely holding oil above 90 here. Incredible. But yeah, we'll buy the dip, we'll make money off this, and we'll play it as things develop. For now, bullishness until 7100. Okay, have a good one. Bye bye.